the latest U.S. inflation data, and a dramatic day for the Fed. Eric Diton of the Wealth Alliance joins us. Eric, let's start with the personal consumption expenditures price index from the Commerce Department. We saw, and this is for July, we saw the headline number come in at 2.6% annually and 2.9% for that core number, excluding, of course, food and energy costs. Anything under the hood jump out to you?
The numbers were in line, the 2.6 and the 2.9. But let's be clear, 2.9 is the highest since February. So we are definitely heating up, and I believe that is tariff related. If you look under the hood, it's actually not really coming from the goods side as much as the services side. Services up 3.6% and goods 0.5%. So interesting. We're seeing it on that services side. And we have a whole bunch of companies out there that are saying, hey, next 6 months, we expect some price increases. And so the Fed's got away. All right, what have we seen so far and what haven't we seen?
The de minimis rule ends today. Remind people what that is and what effect will that potentially have on prices, do you think?
Yeah, so the de minimis rule said, hey, if it's under $800, then you are exempt from any tariffs. And that just ran out. So if you're ordering from Temu or Shines, I mean, these super discounters, and you weren't prone to tariffs before, now you are. Now, you may listen to that and say, all right, so big deal. 92% of packages fall under that exemption. It is a game changer if that sticks. So that is absolutely inflationary. Again, weighing on the Fed. What do they do? Now, Lisa, I keep reminding people, tariffs are not, oh my God, we're going to have this 5% increase every year. A tariff, if you pass along the tariffs, it is a one-time jump in prices. So when the Fed talks about raising rates to control inflation, I don't really see how that works in the tariff world. It's not as though we have an overheated economy and so we're going to raise rates to slow that down. You're simply passing along and it's a one-time jump. And I don't know that keeping rates high is really going to matter in that world.
I mentioned at the top a lot of drama surrounding the Fed. And of course, as you and I are speaking right now, the hearing is going on regarding Fed Governor Lisa Cook's lawsuit against President Trump, who, of course, is trying to fire her. What do you make of the situation and particularly its potential on Fed policy?
I think this is crucial. I think it's a bad situation right now. There's never been a president that has fired a Fed governor, especially we no hearing, right? He wanted no hearing, and it was something that actually happened before her tenure. So I feel like the market up to this point has just been shrugging it off. But the Fed has been independent from the White House since 1951. And I do believe that one of the reasons we are the reserve currency of the world is that comfort that the world has, that the Fed will do what's right with regard to policy, regardless of what the president or any politicians desire. And by the way, there have been presidents throughout history that have leaned on the Fed. This is not new. But the idea of actually firing and replacing people to get policy the way you want it, that is new. And if the world perceives that the Fed has lost its independence, I do believe that is dramatic and negative, dramatically negative.
And do you see a backlash from the global bond markets, or what do you see?
I think it's entirely possible that you could see. I mean, look, we got a little glimpse of it, Lisa, right? When Trump was talking about firing Powell, the market sold off in a big way. So that was just an example of the Fed losing its independence. The market did not like it. Trump backed off. But here we are again. So I think you could conceivably see backlash in both the stock and bond markets.